well, I think it's also a good place to start is to recognize that you can have concerns about the economy, but if everyone is so pessimistic that it feels like you're just having some concern puts you kind of, a contrarian position. Like that's kind of where I find myself at right now. Like there's clearly we have things that we're worried about, right? But then the question
Mhm.
is, well, how much of that is already reflected in the real estate market,
Mm.
right? So, for example, back in March, consumer confidence hit literally all-time lows, which was crazy. Consumer and business confidence. And I was flagging at the time that the confidence readings were below what we saw in like March and April of 2020. So literally, like the world's locked down from this pandemic. For all we know, half of us are going to die. We were more optimistic a couple months ago than we were in 2020. Or sorry, less optimistic, and we were less optimistic than we were in the financial crisis when we thought literally the financial system might melt down. It was an enormous overreaction. Like, yeah, we got tariffs. We got an issue with trade
Mhm.
tensions with our largest trading partner. For sure, it's a concern. But should people be like more concerned than they were in 2020, 2009? To me, that just felt like an enormous overreaction. So I made the mistake of posting on Twitter or X, saying, how you want to
Okay.
refer to it. To me, it's always
Yeah,
Twitter.
the
But
arena.
I posted,
Twitter
right,
or X, that's the arena. You
the
are
arena.
entering the arena. Yeah.
Well, so I made the mistake of saying in March, like, I think this is the lows, right? This is going to be the low
Mm,
point for home sales this cycle,
mm,
because you can just feel how much pessimism was baked in. And man, I got a lot of hate for posting that.
mm.
Like it was crazy. And so, from there, if you fast forward to now, we've seen home sales, if you adjust for seasonality, we've seen home sales in places like Ontario up about 25% off those
Yeah.
lows. And nationally, it's more like 12 or 15%. So, like, so
And we
far,
can
I'd say
confirm that
you're
just
right.
in our brokerage would be a small microcosm of the greater data points, but we can confirm that we're seeing the same things. That was about our lows as well, coming out of the winter into the spring. That was about our low. Yes.
Yeah. And so my perspective is like, I don't think we're returning to like a rip roaring market that we saw in 2020, 2021. But it's also pretty clear to me that things have to go spectacularly badly for sales to get back to where they were in March. So, for example, everyone says, well, what if Canada goes into a recession? And I agree, a recession in Canada is a very real
Mhm,
risk.
mhm.
But my point would be we were already at deep recessionary levels for home sales, right? Like if you adjust on a per capita basis,
Sure. Yes.
home sales were lower than they were in 2020, lower than they were in 2009. They were basically at early 1990s levels, which was a really nasty recession, as you guys
Mhm,
know. So my point would be we've already kind of front run the recession in terms of housing demand. So if you get a
mhm.
recession, like I could see a scenario where in a recession rates come down a little bit, home sales they just kind of grind a little bit from here, maybe even go up a little bit even in a recession. So
Mhm.
my point was just that I think from that perspective the worst is probably behind us. And then I think you can also make an argument, and I know you want to get to this, but I think that the issues in the condo market are well understood, and I'm not going to downplay
Mhm.
those. The condo market's going to have issues for a few years. I think things are very different when you talk single family in the big cities, because there we can see that the supply response is really alarming. Like we are going to see a dramatic reduction in new supply in the next couple of years.
Okay, since
And
you
so
brought that up, I'm just going to throw up a slide that I thought we would get to. So let me just put that up. There we go.
yeah,
While you're
yeah, there
talking
it
about
is.
it. Sorry.
So this was the presentation I gave to your group. You see the chart on the left, single family inventory. This is what's currently for sale in the GTA, just to throw up an example. And this is I'll use the GTA as an example. It's our biggest market, but you see this broadly in most of the metros, Southern Ontario, Vancouver, BC, Lower Mainland. A lot of inventory for sale in the resale market. But if you look at the chart on the right, these are single family building permits. Now, before developers can build, they have to get a permit to do the building. And you can see this is the permitting activity. It's down to levels we last saw in 1980. So you don't have to be a rocket scientist to figure out that when permits are this low, you roll this forward, construction activity is already starting to fall off. And that's going to imply much less new supply down the road. So I think you can have a scenario where this time next year, or even well before that, let's say kind of Q2 next year, you'll start to see the single family market, the inventory levels start to tighten a little bit. And so if you get an uptick in sales and you get a reduction in supply, like the market balance is going to tighten for single family. I don't think anybody's talking about that. So my point is just that I'm not like
Mhm.
I'm not like raging bullish, but I feel like
Sure.
I
Yep.
am relative to everybody else who I think is too pessimistic. I feel like now I'm, leaning the other way.
Okay, because I guess then the too quote unquote too pessimistic crowd is coming from a place of like, well, Ben, some of the job losses that really we aren't even have seen them yet, like Bank of Nova Scotia, I think was a recent headline saying
Yeah.
2,500 people in Toronto are not going to be working anymore, or they're going to change the location of those jobs to out of the country. So they would say, Ben, well, you know what, the bad news still coming, but you're saying maybe the real estate market was a little more sensitive to some of the interest rate cuts that happened like a little while ago, and they're kind of like they were a little more sensitive to the change in economic structure in Canada earlier, so the housing market might be through the worst. Am I
Yeah, that's exactly
summarizing
right.
that?
Yeah,
Yeah,
yeah. No, I think that's one way to put it. I mean, my point was that, if we get a recession in Canada, it'll be the most well telegraphed and widely expected recession we've ever had. And I think it's likely that we'll get one. But the point is, everybody in Canada understood that back in March when we
mm-hmm,
got into these major
mm-hmm.
issues with the US. And you saw sales just drop so much. I just don't think that transaction volumes are going to go lower, even in a recession. No, listen, you know, unless the wheels really fall off. Like
Sure,
I'm
sure.
when I
Yeah,
talk
yeah,
about a
yeah, yeah.
recession, I mean a run of the
A normal
mill,
recession, not a
cyclical
crisis.
down.
Yep.
Right, right. I'm
Yep.
not projecting like some sort of, you get some sort of wild sovereign bond
Yeah.
turmoil rate,
Sure.
like all bets are off. But if we're
Yeah.
talking about a regular run of the mill recession, like I think we've, even in that scenario, we've probably seen the lows for sales.
I guess going back to your point about single family homes being, not being built in the province of Ontario, just from the building permits that you're looking at, we're just seeing something interesting that on single family homes that were legally split up into 2 units, those were being aggressively rented for sure. We had some softness in the last 6 months, but something interesting is happening. Any that have not, so if we go into an area like the Hamilton area, any single family homes that have not been converted into a legal duplex or a legal second suite and are just staying as a single family home, we're seeing such strong rents because families are coming with 2 sets of adults. It'll be like the older parents and the adult children wanting a house like that and really putting pressure on the rent. So like we're seeing a single family home in Hamilton rent out for like $3,400, which is surprising to us because we thought it would have softened a little bit. But the
Mm.
reason is because these families are like, this is the only true single family home we can find. We're combining 2 families so that our parents are kind of living with us to kind of help on the rent. And because the supply of those has decreased because a lot of people have converted single family homes
Mm.
into legal duplexes, they're saying, no, we want this. And our team was surprised that one rented out a few months ago for $2,900, and we thought that was like, oh, okay, that's the number. And now another one just rented out for 34. There was 11 families lined up to
Wow.
see this house. So we're like, oh, the market's so weird because to your point on the condo completions and purpose-built rentals, we're going to definitely have softness there. But because the lack of new single-family homes and then the lack of them that have stayed true to being a proper single-family home, we're seeing kind of some rental demand there. So it's kind of really weird. Anyway, that number is surprising
No,
us.
that's actually really interesting, and I totally believe that. That actually makes total sense. I would not dispute that. I think one of the things that when we get into the nuance